Hi there, business owner, and welcome to the 3Bs podcast, the place where we go beyond the numbers and dive into strategies to help you build a better business one step at a time. I'm your host, Stephanie, a multi-award-winning entrepreneur with over a decade of experience in the bookkeeping and accountancy world. If you're a business owner looking to streamline, grow, and get back the time that you deserve, you're in the right place. We're tackling real-world problems, answering tough questions, and digging deep into business building secrets in just 15 minutes each week. So are you ready to build a better business with confidence and clarity? Then let's go. Of the 3Bs podcast, your go-to place for 15 minutes of business building, motivation, inspiration, and education each week. As always, I'm your host, Stephanie, your no-fluff finance translator, and the voice of calm when your tax bill hits your inbox and your stomach drops. Because that time of year is coming. The brown envelope, the email ping, the HMRC login dread. But what if it didn't have to be a panic? What if your tax bill wasn't a surprise, but just a part of your plan every year? That's what we're talking about today. How to stop stressing, start preparing, and keep your cash flow healthy all year long. Panic happens every year to business owners all over the UK. But tax panic is rarely about the number itself. It's about the not knowing it's coming. Even if the number itself might be manageable, it's unexpected, which makes it stressful, or you spent the money already, or you never really understood how it was calculated in the first place. There's a few things that usually go wrong when this happens and tax panic kicks in. You didn't set money aside. You didn't know what profit you were making in the first place. You thought the expenses would just bring your bill down more than they actually did. Or you're mixing up business and personal money. If any of this sounds familiar, you're not alone. I want to strip it back and I want to go through what tax do you actually owe. Because depending on your business setup, there's a number of different things that you could owe. So if you're a sole trader or you submit a self-assessment, then there's usually three things that you need to pay. Your income tax, which is usually 20 to 40% depending on which threshold you're in. Your national insurance contributions, and payments on account. So payments on account I talked about in a previous episode if you want to go back and listen to it. They are advance payments that catch everyone out, and there's one particular financial year where you are always really stuck if you have a payment on account and you don't know it's coming. The basics are is if your tax is £1,000 or more that is due at the end of that financial year, they will ask you to pay that, the HMRC, as well as 50% on top as a down payment on the following year's tax bill. Now, that will be in the January, so you'll have to pay a whole and then half of that again. So 150% in the January and then another 50% in the July, so that by the time the next January comes around, you're paying the difference between those payment on accounts and what your tax bill actually is, and starting to put a down payment for 6 months ahead. So it's only that first time a payment on account hits, it causes so many problems for business owners when they have to pay 150% in one go. If you're a limited company, it's corporation tax, which at the moment is 19% of profit. Direct salary tax via pay-as-you-earn, so a payroll, so you'll have tax and NI and pension contributions on your salary tax. Dividend tax if you take dividends from your limited company, which is money you can take as a shareholder from the profit that's left in the business. And possibly VAT too, although VAT is limited company and sole trader depending on when you hit that £90,000 threshold we talked about a few episodes ago. You need to know which category you fall into. You need to know what rates apply, and most importantly, you need to know what profit means. Go back to episode 123 if you missed it, because that's where we went through profit versus cash and what the differences are between the two. So the tax timeline. Here's when things are due. Make a note of this if you don't have it. The 31st of January is the balancing payment and first payment on account for self-assessment. The balancing payment is just the bit that's left, the tax that's due that you haven't already paid via a payment on account. The 31st of July is that second payment on account towards that self-assessment year, which is why it's more important than ever to start putting money away all the time, regularly, so that when these payment accounts come around, you have the cash flow to pay for them. Corporation tax, 9 months after your company year end. It's important to note that paying your corporation tax and submitting your corporation tax have two different deadlines. 9 months after your company year end is when you must pay your corporation tax if you are a limited company. And finally, quarterly, VAT returns and payments. So you have to submit and pay your VAT return every quarter if you are VAT registered. It's also important to note that from April 2026, if you are a sole trader or a landlord with income of over £50,000 turnover, not profit, you will be required to submit quarterly via Making Tax Digital for income tax. Now you need to submit your income and expenses quarterly, you do not need to pay quarterly. I just wanted to put that out there so we don't get confused. Set reminders, create a tax calendar, or get a bookkeeper like us to manage it for you and let you know when those dates are coming up. But these dates don't move, so your planning shouldn't move either. The 31st of January, the 31st of July, 9 months after your company end, and quarterly if you are VAT registered. Those dates are set in stone unless the HMRC decides to change it. Planning ahead for tax isn't just about saving. It's about understanding how the bill is built and adjusting accordingly. As a business owner, if you do not have a bookkeeper or accountant that does this for you, you really need to understand this. But even if you have a bookkeeper or accountant, it's worth having the knowledge of how these bills are built so that you can make those financial decisions and understand the numbers as your bookkeeper and accountant are telling them, or question them if something doesn't quite make sense to you. Here's some of the things that work to help you plan ahead. Creating a separate tax savings account. Now I often say use a bank like Monzo or Starling so that you can just create pots and transfer it out. Sometimes, if you're like me and need it out of sight, out of mind, create a completely separate tax savings account. Go for a different provider, different bank, building society. Have a bank account with a separate bank that you don't hold the card for, that you don't look at regularly. Put it away and treat it like it doesn't exist. Every time you pay yourself or get paid, move a percentage into that pot, move a percentage into that savings account so it starts to build up but you don't see it. Out of sight, out of mind is great when it comes to like putting money away to one side. Use software that shows you your real-time profit. Xero, Free Agent and QuickBooks, whatever you use as bookkeeping and accounting software, make sure you know your profit month by month. With the VAT and the Making Tax Digital all having to be submitted through software, now is a better time than ever to have that bookkeeping and accountancy software if you're used to using spreadsheets or doing it in an old-fashioned cash book. Have a look now. It also helps having that real-time profit and helping you plan for your taxes. Review your numbers quarterly. As an absolute minimum, monthly is much better, but quarterly is a minimum. Check your profit and loss, check your tax owed, check what's coming up, not just in January. And if you don't understand it, either get a bookkeeper or accountant to help you, or come and see us and have a strategy call. We can help you understand your numbers and give you the templates and the strategies to help you keep it up going forward. The biggest one, talk to your accountant before year end. Don't wait until after the year is closed. That's too late to make any changes. A pre-year end review can save you thousands of pounds in tax. Because if you're looking to make an investment into new machinery, new uniforms, something that you need in the business that's a big cost investment that you're waiting to spend just after the tax year's ended, by bringing it forward sometimes a couple of days can save you thousands in corporation tax or income tax. And understanding payments on account. They are a nightmare if you don't expect them, and as I said, they catch so many business owners out. But if you plan ahead, you can reduce the shock because you know that they're going to come in and start putting more money away so that you've got that 150% saved for the January it's due. What to do if you're already panicking? If you're listening to this with a tax bill already sitting in front of you and no idea how to pay it, or you have nothing put away for January, here's what I would do. First things first, breathe. Don't bury it, don't panic, just take a second. Then log into your HMRC business tax account, whether that's sole trader personal tax account or limited company business tax account. Check the amount that's due and the due date. Then check if payments on account are included. That is often why it's higher than expected from a self-assessment sole trader personal tax perspective. If you know you can't pay by the deadline, call the HMRC earlier rather than later. They are far more flexible than you think if you get ahead, and they'll help you put in time to pay arrangements and payment schemes if they can to help you. People are scared of the HMRC, and it still confuses me why, because their job is to help you, not to hurt you. And finally, set up a payment plan. It is possible. Don't wait until deadline. Don't wait until penalties and interest starts being applied to it. If you know you can't pay, call the HMRC early and set up a payment plan, time to pay arrangement, and they will help you get it out the way. And they will help you get it sorted. And I think the biggest thing I need to say is that you're not the only one. You're not a bad business owner for doing this. You just didn't have the right plan. You didn't have somebody like me sitting here helping you and giving you this advice at a time when you're willing to hear it. This 15-minute episode today will hopefully give you the confidence to no longer bury your head in the sand if you have been, and finally tackle it. Get it off your to-do list. They're not as bad as you think. And think how much easier you'll be able to sleep at night knowing that that thing that's been weighing on you, that weight has been lifted. Planning for tax is a cash flow issue, not a shame issue. And it doesn't mean that you're bad with money, it doesn't mean you have a bad business, it just means no one taught you how the system works. If you've been doing it yourself, DIY bookkeeping, ever since your business started, or you've achieved huge growth in a short amount of time, it's understandable that you've got yourself in a bit of a pickle, but that's not a shame issue. You're learning it now, you're listening to or watching this podcast, you're taking the steps to educate yourself. Here's your plan going forwards. Know your numbers. Save in small amounts all year round. Get support before it's urgent. And treat tax like a bill and not a surprise. The same way that your software bill comes out every month or your rent's due every quarter. It's just another expense of doing business. And the bigger the tax number, the better your business is doing, the more profit it is making. Paying tax is a privilege, which sounds completely backwards, I know. But paying tax means you're doing well, you're building a business, your business is growing, you're making money. And that's what we're all here for, right? If this episode hit home for you, do book a call with us at ABCS UK. We offer strategy sessions and ongoing support to help you plan for tax without the stress. We also do 15-minute discovery calls if you just need to touch base with someone who knows what they're doing to give you a light at the end of the tunnel. At ABCS UK, this is what we do every single day. We don't use jargon without explaining it first. We don't have scare tactics. We just offer clarity, calm, control over your finances, and support to help you build businesses. And that brings me to the end of another episode of the 3Bs podcast. I hope you found it useful and that you're liking this new style of doing a few in bulk and a little almost mini series focused around a few topics. So if you haven't listened to the last 3 or 4, then go back and listen to them too. Hopefully it helps you reset and restart ready for the new school year. I like to use it as a bit of a new year, mid-year, when the kids all go back to school and finally get round to sorting your business's finances. Next week we've got something exciting coming, but if you've missed any of our last few finance episodes, again, go back and binge them. These last 5 episodes are your toolkit to help you build a better business and get your finances under control. Please do hit follow, find us on social media, leave a review. A 5-star rate takes 2 seconds and means the world to me and helps me reach more business owners. I've been Stephanie, this has been the 3Bs podcast, and I'll see you next week for the next one. Bye! And that brings us to the end of another episode of the 3Bs podcast. I hope you found it useful and that you're walking away with some motivation, inspiration, or education to help you build a better business. Don't forget to subscribe, leave a review, and of course connect with us on social media for more insights, tips, and behind the scenes content. Your next step in building a better business is just a click away. I can't wait to connect with you, and I'll see you on the next episode. Bye!